Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratus Advisors. Brent fell 19 cents a barrel last week to average $61.57, but with significant intra-week volatility. WTI fell 51 cents a barrel to average $52.49. For the week ahead, we expect Brent to average around $62.50 a barrel as geopolitical tensions remain high. Markets were transfixed by reports that two tankers had been attacked near the Strait of HORMUZ, with the U.S. quickly asserting that the attack was carried out by Iran. Iran has continued to deny its involvement in the attacks, as well as earlier attacks on May 12th. Almost more important than what actually transpired is what this means for Iran-U.S. relations. Leaders in both countries have made dramatic statements, and neither side appears willing to make any sort of goodwill gesture in an effort to lower tensions. The most likely outcome of the attacks will be an increased U.S. military presence in the Strait, increasing the likelihood of a confrontation. Prices will remain supported this week on the back of geopolitical tensions. Geopolitics will be a positive factor in the week ahead as tensions remain high in the Gulf of Oman. The global economy will be a negative factor in the week ahead. Markets saw several governmental agencies release more bearish outlooks for the global economy and future oil demand. A trend appears to be forming in which there's an entrenched expectation that trade disputes will be resolved by 2020. Given that we're halfway through 2019 with no concrete progress to report, this seems unlikely, and any macroeconomic expectations will need to take into account the impact on timing and negotiations that upcoming U.S. elections will have. Supply will be a neutral factor in the week ahead. Oversupply concerns remain focused on the United States, but in light of the recent price correction, OPEC members have started reassuring markets that any increase in supply will be fully justified by pricing and fundamentals. While strong, oil demand is likely to be a neutral factor in the week ahead. Margins globally are generally below their seasonal averages for this time of year. However, utilization is still high and product stocks are falling.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us. For more hard energy videos, follow our social media channels.